I've been an investor in growth stocks for over 20 years. I started in college and I've been through the dot-com bubble. I've been through the financial crisis, everything in between. The one thing I definitely have learned is that obviously, bear markets are painful. It's no fun to see your stocks go down. It's no fun when stocks aren't going up every day and they're going down every day. But the one thing that I've learned in almost 25 years of investing in growth stocks, I've been very successful at it, is that these are opportunities to accumulate high quality companies, growth stocks, and you can grossly outperform the market when you get to the other side, to that bull market. Now, there's no guarantee where we're gonna bottom, that we can't go lower, but I'm gonna look at 3 growth stocks that are in the ARK Innovation ETF, the ARKK, that are down between 60 and 80% that I think are good buys at this price level and lower, accumulate, dollar cost average, and hold long term, 5 to 10 year holdings. And I know that Cathie Wood and ARK have been beat up. They have a lot of controversy. That's the thing with ETFs. There's good and bad stocks when you buy a basket of ETFs. I'm gonna hand pick 3 growth stocks that I own myself that I think are opportunities at these levels and lower to accumulate long term. Let's get into it. Now, we are having a bit of a bounce today, but these stocks are still attractive. This is Twilio, the first stock. These are in no particular order. It's up 3% today. Now, the 52-week range on this, the low was $64.29. Just here, September 1st, a few weeks ago. The high on this is the 52-week high. This is not the all-time high. The 52-week high, October 21st, 2021. And I'm gonna show you a chart for each of these stocks and I'm gonna break it down. Now, the thing about Twilio, okay, it's a 2.2 EV NTM revenue, 2.2x. Now that's very attractive. When you look at cloud SaaS names, it's one of the most attractive. And the market just doesn't want to touch it. They think that because this is not profitable yet, that the company's somehow gonna die. The free cash flow on this is negative 6%. That's obviously not a good number in this environment, but it's not that bad of a number. And they have a plan right now to get profitable by 2023. They've recently done some layoffs just a couple weeks ago, trying to help with those margins and just trying to get profitable here over the next year or so. And I have confidence in this management team and this company. I've owned it for a while. I think it's very attractive, especially if you can get it closer to $65. Let's look at a couple more things here on Twilio. Now, I've talked about Twilio several times on the channel, and you can check out some of those past videos. We talked about the last earnings call and some of the issues, and I kind of addressed those. And I think they're in good shape. So here's the CEO, came on CNBC here on Tech Check, and said, we're headed towards profitability in 2023. And they recently just did some layoffs here. I'll show you this next article. This was just September 14th. Twilio to lay off 11% of its workforce. So they're doing this to try to get profitable by 2023. The plan will aim to improve operating margins, create a better selling capacity, and reduce operating costs. They're making strides to get where they need to be. Let's look at a quick chart. I'll do that for each of these stocks. If you like looking at charts, every Wednesday we do chart day. You can check it out, patreon.com, Fired Up Wealth. There's a link in the description of the video. But this stock, Twilio, actually topped out February of 2021. Some of these growth stocks started their bear market kind of downward spiral, beginning of 2021. A lot of these stocks have really been in a bear market for many, many months. So we're looking at 18 months. This thing has been a constant downward pressure. It's tried to get back up there, but hasn't gotten there. It got to 405, 403, 412. So if I look at back in October, this is the 52-week high, it was $373. It's now trading at $71. It was $457 in February of 2021. Now, it doesn't mean if you buy Twilio, it's just going to run up to $457 tomorrow. But what it does tell you that it's beat up, it's something to at least look at. And then you have to look at the fundamentals and say, is this stock broken or is the company broken? And I think the stock is broken. I think it's undervalued here. Now, when we do chart day, anything you see in orange is previous chart day. So this is old data. But I said, this was like a month or two ago, I said, hey, you probably see $55 to $60. Why not? And I said, it's trying to hold 65. If it doesn't, $50 to $57. Now, a lot of bullish news came out on this. We had some upgrades and the stock kind of ran up and then it's pulled back. So the low on this thing, $64, this happened here basically, September 1st, like I said earlier. I like this stock a lot, especially if it gets 65 or under. But even at $70 a share, $71 a share, if I'm thinking 5 and 10 years and I'm dollar cost averaging, I believe this is a solid one in the ARK Innovation ETF that you can buy as an individual stock and hold for many years. I think it'll be profitable next year. And even if you're swing trading, if you hold this for 18 months, it could give you a great return, maybe even before then. Generally swing trading is less than a year, but if you're looking for an opportunity to buy some growth stocks, especially as a long-term investor, Twilio is one that should be on your radar. Check that one out. Now, this next stock is a love-hate type of a stock. You either love it or you hate it, you get it or you don't. Now it's up 6%, so be careful chasing. You don't want to FOMO this. And this was 2165 back in May 10th. A lot of these growth stocks bottomed in May and June. A lot of the stocks that we were buying in May and June are up 30, 40%. This one's up almost 80, 90% from the lows. So you have to be careful. But I think even at this $35 range, this is an attractive long-term opportunity. I'm going to show you something here. They're partnering with Walmart. So this is hot off the press. It just came out today. Walmart arrives on Roblox for the first time with 2 new virtual worlds to engage young shoppers. And of course, you know the story probably with Roblox. They're really targeting younger like kids, but they're trying to expand that. They've made some acquisitions trying to get better avatars to attract the teenage and even the young 20s. Whether or not that happens is up for debate. But what I will tell you is that the engagement, if you look at some of the statistics on Roblox, they're absolutely off the charts. Walmart announced today it's stepping into the metaverse with 2 new experiences, Walmart Land and Universe of Play. The virtual worlds are aimed at younger Walmart customers. So they're trying to get younger kids attracted to Walmart, so their parents take them to Walmart and it kind of sticks with them. So they're talking about, I've never heard this term before, Generation Alpha and Generation Z. So I guess that generation younger than Gen Z is Generation Alpha. I'd never heard that before. Walmart has tried other virtual tech before, such as new AI-powered virtual try-on technology. So they're doing a bunch of different things on here. I really think that this is just the start. This is just the beginning for Roblox with these partnerships. They've got Nike Land, they've got American Eagle Outfitters, Ralph Lauren. If you get these kids kind of hooked on these brands at a young age, it can be very powerful. So I see the advertising segment of the metaverse of Roblox being huge for this company longer term. Let me show you some of the statistics. They'll absolutely blow your mind. Okay, so the first thing that sticks out, 12 million creators. Platform has delivered 29 million. They call them gaming experiences, but they're like unique games. So you build an avatar, you can spend money called Robux, and you can buy different things, hats and virtual items for your avatar, and you can experience those in every game. So you go to these 29 million different experiences since 2008, and all that stuff sticks with your character. It's like their own metaverse is really what Roblox is. It has amassed 41.4 billion hours of engagement since 2008. That is a big number. More than 5.8 billion virtual items, both free and paid. So that's how they make money in those virtual items. Roblox has 45.5 million daily active users. That's up from 7 million in 2016. A lot of people thought this was just going to be a pandemic play. The numbers are still pretty strong. Now, if you look at some of these other numbers, some of this stuff just blows my mind. Now, the largest age group, 9 to 12-year-olds, make up 26% of the user base. The cool thing about Roblox, if you're not familiar, you can play across different platforms with your friends. So one friend can be on a PlayStation, one can be on an Android phone, one can be on an Apple iPad, and they can all play together in this virtual world. Now, graphics aren't the main priority, but again, they're trying, like Loom, and there's some other acquisitions they're doing to try to improve the graphics. But if you look at Minecraft, this is an argument that's made a lot of times in the Discord community. Minecraft is the top selling video game of all time, and the graphics aren't really that great. So this might not appeal to you if you're 35 years old, but try to keep an open mind about Roblox. I think there's a lot of opportunity for this company to grow, not only with the Robux, but I think that those advertisers like Walmart coming into the picture, that could be huge for Roblox. You can see the daily active user growth. It's steadily increased even after the pandemic. Over 180 countries, and that's what's really cool and unique about it, is you can make games. Almost anybody can just start making games. It's pretty simple to make. They've got Roblox Studio, and you can make them in different languages, 180 countries, so it makes it very unique. Okay, together the US and Canada have 14.5 million daily active users. Europe is second with 13.2 million. Europe accounts for 29%, and they're trying to grow that. They have 6.8 million daily active users in Asia. They're trying to grow that, obviously. This stat was interesting as well. So when you look at 2021, 41.4 billion hours of engagement. Think about how many hours that is. 7 countries surpassing 1 billion hours each. So these are the top 7 countries you can see here: United States, Brazil, UK, Philippines, Mexico, Russia, and Thailand. I won't spend any more time on Roblox, guys, but I am bullish on this stock. I think that this company will continue to do well if you look in 5 or 10 years. It's run a lot from the bottom, still attractive here. If it goes lower, even better, something to accumulate. I think it's going to be a good performer longer term. Let's look at a chart here really quick. So Roblox actually went public in a direct listing. It was an IPO. This was back in March of 2021. Now, if you look at a chart on this thing, you can see it ran up to $141.60. Obviously, that was ahead of itself. For me, it was always like $65 or less dollar cost average. And of course, it's still down a lot, but no way I would have chased it over 65 at $141. Now, this is the last chart day. Again, anything you see in orange is previous, so I need to update that. 37 to 41 possible if the market keeps selling off. And guess what? It got in that range and actually broke it. It got down to like 33. So even a little bit lower, but now it's back in that 37 to 41 range. You can see the low on this was back here, 21.21. It was kind of following a trend line up. It broke that. If it breaks down, the S3 is 27. Maybe it retests lows. It seems like it wants to hold up a little bit better. It's probably not going to retest those lows. If it does, it's a great opportunity. If you can get in this range and lower, DCA, I like this one long. Do some homework on this one. I've got a 7-year-old. She loves it. Even my 4-year-old's starting to play with her. It's a kid's game, but I think there's a lot of opportunity, especially in the advertising segment, that is going to continue to grow. I do need to announce that this video is sponsored by The Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/Fired Up Wealth. Go check those guys out. They're a great partner. They don't tell me what videos to make. They let me be completely independent, what I want to cover in the channel, and they help me bring more content to you guys at no cost. And if you're looking for stock picks, it's a great place to go. Check it out. Of course, you have to do your own homework, your own due diligence. You have to learn how to build a portfolio, how to dollar cost average. And that's why we're such great partners, because Fired Up Wealth kind of takes it to the next level. You subscribe to the Motley Fool, get the stock picks. You come to our private community, get Discord and all the private videos, all the masterclass videos. If you're a new investor, that's going to set you up to be successful. So check out both those services, Motley Fool, as well as Fired Up Wealth, Patreon. Now, Shopify is down like 75% year to date, but this has been an absolute roller coaster as well. And this one did a stock split, so it kind of hides some of that damage. You're used to seeing $1,000 a share. It would get down to 1,000 and then it would rally up to 1,800, come back, or 1,500, come back. Well, now, if you look at this, $176.29, the 52-week high, November 19th, it got down to $27.65. So this one is hovering kind of around those lows still, at $27.65. Now, this stock is not perfect by any means, which is why the stock has sold off, but they're also making strides to improve their margins and try to get profitable at some point. You look at these, none of these stocks have PE ratios. They're still burning cash, but all three of these, I think, are in positions. If you look at Shopify, they just did some layoffs here, just like Twilio, sinks 14% after company says it'll lay off 10% of its workers. This was just end of July 26th. So it plans to lay off roughly 10% of its global workforce. Canadian company, which makes tools for companies to sell products online, was one of the biggest beneficiaries of the pandemic. But I don't think the company is going to go out of business. It is attractive. Let's look at our chart really fast. So this was actually the high, $176 back in November. It didn't get higher back earlier in the year like some of the other growth stocks. But you can see it's been a complete dump off from 176, down to 28.93 it looks like right now. So on this one, guys, we've been saying, that's probably going to make some new lows. We circled it here. This was down at like 24, 25. We said you'd probably see 25 to 30 or 24 to 30. Now, it hasn't gotten quite down to that 24 range, but it got pretty close. I mean, it was down to $26, whatever we said earlier. So this circle is really the sweet spot. You can see it kind of tested and got worse every time. So you want to make higher lows, and this was $30.81. Then it was $29.76, $29.72, $29.07. It's been drifting, but I think it's getting close to washing out between $25 and $30 dollar cost average. This one has the most risk, in my opinion, of the three, and it's one that's placed in that pandemic bucket. But I do think Shopify, will recover longer term. It might take some time to get back to these highs, but I think if you're buying it here and you don't have a position, you're trying to find growth stocks that could give you some great alpha and some great returns over a 5+ year period, definitely check out Shopify. I think it's a good one. I appreciate your time and attention, guys. I hope you have a great rest of your day. Make sure you like, subscribe, drop a comment. Take care.